Hi all, welcome to another video. Gold has rallied more than 50% or close to 50% this year and more than double, more than 100% in the last 3 years, right? So let's understand why so much of demand for gold among investors and what's ahead for gold as an investment, right, as an asset class. So let's understand that in today's video. I thought it will be useful where I am trying to understand. I had not researched more about gold because I am more of an equity person, stock market person, but uh, gold and silver at the same time has a lot of interest, especially in the last 8 months. So I thought I will do a detailed analysis around commodity, especially gold, and try to understand what's happening around that space. So firstly, if you see, the rally started 3 years back, but the last 8 months, if you see, the 50% is primarily what I think is happened after Trump's presidency, right? So what happened over there? Since Trump joined, White House, the decisions that he has taken are not so great for other countries, right? Especially India or China. He had put a lot of tariff on China and also in India and many other countries around the world. And because of that, countries are facing a lot of uncertainty around their businesses, around their companies selling their products in the US marketplace. At the same time, there are wars. I mean, Russia-Ukraine war is still going on. We don't know exactly what's happening around there. Israel, Palestine, still a never ending story, right? Geopolitical tensions, economic uncertainty. During such instances, countries tend to buy a lot of gold as a safe investment haven, right? So that is the primary reason. Even if you see Indian central banks, RBI has loaded a lot of gold in the recent months. China has bought, I don't know, I mean, how much tons of gold into their reserves, right? So because of uncertainty and geopolitical tensions, and we don't know, the economic policies that Trump administration coming up with every other day, it's making investments so and so tough. So people or investors are tend to buy a lot of gold as a hedge. And second reason is, of course, de-dollarization, right? What is de-dollarization? When two countries transact, usually they purchase things in dollar, but recently what's happening is people's trust on dollar is reducing. I mean, the country's trust on dollar is reducing, and they don't value dollar as much as they used to before. And instead of buying a lot of dollar for trades, they are loading up gold. They want to make sure that they are not entirely dependent on dollar. They want to leave that space to gold, and because of that, the demand for gold has increased a lot. This has started happening it's not a recent phenomena. It started from, I think, last 2 3 years. I think that's the primary reason gold had rallied in the last 3 years, if you see. And the third point is inflation. So inflation is there. I mean, inflation is more in the market. People tend to buy gold as a hedge, because if you see, if inflation is more, central banks tend to increase the interest rates. If inflation is more, the purchasing power will decrease. The value of dollar will be reduced. So to curb that, to play against that as a hedge, investors tend to buy a lot of gold. So inflation, when the inflation is more, investors tend to buy more of gold. So in the last 8 months and last 3 years, primary reasons for the surge in gold rally is geopolitical tensions and economic uncertainty. That's clear, right? And the indecisiveness or the unpredictability in decision making of Trump administration. Now, the most important aspect of our discussion is whether this will be sustained, the gold rally will be sustained ahead, like in the upcoming years or upcoming months, is something we have to dig deeper, right? For that, we have to understand the historical returns of gold, right? Gold as an asset class, we have to dig little deeper into that. So historically, if you see, like gold as an asset class has surged from 1970s until 1980. Then what happened was the inflation peaked in US at late 1970s and early 1980s. The central bank started increasing the interest rates. The interest rates became so high, inflation came down, investor sentiment came back to markets, economic stability happened. You see that historical chart, gold had a bear market from 1980 till 2000. Two decades, 20 years, gold had not given any returns. In fact, if you see the high of 1980, the gold price, it plummeted around 70% within 2 years. You can see, you can check the data in internet, it's available there. So gold has, yes, historical bear markets, and that too a prolonged bear market, right? And the same thing happened since global financial crisis of 2008. After that, interest rate came down, economic uncertainty kicked in, gold interest for gold again increased, and it reached a peak of, by the year 2011, gold reached its peak. Since then, again, economy became stabilized, interest investors interest into stock market started, and between 2011 till 2019 August, 2011 August till 2019 August or so, 8 years, if you see, gold had not given any major return. It was flat or came down. So gold has historically this long duration of bear markets, right? So going ahead, can we see this surge again, or can we see a bear market or a reduction in value of gold? So my concern with gold as an investment, even right now or for the future, is that gold, for the number one reason, the number one concern is gold doesn't give yield. So if, for example, if you put your money into a fixed deposit, or if you put your money into a bond, it gives me a certainty, right? I mean, it has a fixed interest rate, so I will be getting some sort of interest out of my investment. But gold doesn't provide that. Only thing is, probably if nothing goes wrong, gold will be flat, or over a long period of time, it may give a moderate return. But that second point is again the most important aspect, right? Yes, it doesn't provide a fixed interest, but my second concern is that gold works on sentiment, investor sentiment. Markets or companies, stocks work on fundamentals. Let me explain that clearly. So historically, if you see, gold, yes, we know that it's a hedge against inflation. It's a good asset whenever there is uncertainty in the market, or in the world around us. So investors trust gold as a commodity. So the price of the commodity or gold is driven by sentiment. But when it comes to stocks, right, we can clearly see that the performance of the company will decide the stock price. Of course, there are exceptions where there is no direct correlation between the performance and the stock price, because there will be a lot of enthusiasm for the future of the company, and though the company is not providing any good profit or earnings at the moment, but investors believe that in future they provide that and thinking that they invest. But again over there, if you see, I mean, long term, if the companies, investors will definitely invest for the future, but after some point of time, after 2 or 3 years, still the company is not performing, definitely they will dump the stock, right? And the stock price will come down eventually. So at the end, the stock price will work on fundamentals. We have a clear idea, if the company is performing, yes, well and good, we can invest. Otherwise, we can exit out of that. So my concern is that, I don't have a clear understanding, or the clear picture of the investor's sentiment. It's very hard. I mean, at least for me, there will be people who think through that and bet on gold or any other commodity. But for me personally, it's very hard to understand that sentiment. And for the answer, right? For the question of whether gold is still a good buying opportunity, I would say, like, from the data that we have right now, still there is lot of uncertainty uh, around the world. We still don't know. We have around 3 to 3.5 years of Trump's presidency in US, so anything can happen. In terms of policies and tariffs and other decisions. So there will be a lot of uncertainty in the future. And right now, what's happening is they started, reducing the interest rates. The U.S. Federal Reserve started the interest rate cut cycle. Even it's there in India also. So when they cut the interest rate, what usually happens is inflation tend to kick in again, right? So historically, if you see, investors will tend to buy more gold. So the points that we discussed, right? Economic and geopolitical uncertainty and rising inflation actually favors gold. So data speaks, yes, there can be potential, growth or potential positivity around gold as an investment among investors in future also. But how long that will be there, or how much gold can rally even from these levels, is something, like anyone, we have no clear picture. But data says yes, there is still potential room. And the another most important aspect is when to exit, right? You invested right now, but how do you know that this is the top, or this is enough, or yes, beyond this I see very limited upside for gold? How can you confirm that? That is where I am struggling. And because of that reason, I don't know a clear clarity on when to exit. I may not be investing in gold, especially at this level. But yeah, it's up to individuals, up to you, to take that call. But what I thought was, I will make sure that what's happening around gold, and how it work, and in historically, what happened, and in future what are the points that we should keep in mind before investing into gold. So I hope this video was useful. I feel, yeah, I have covered all the topics. So yeah, if you find value in this content, do subscribe to my channel. And I have talked about other topics, like dividend stock investment, and yeah, I mean, how to start your investment, how to study about stock market and personal finance. I have done a lot of videos around that. Do check in uh, my YouTube channel, Value Investing by Vineeth. I will come up with another video. Till then, Take care. Bye bye.